Welcome to my channel. If you're a new follower or subscriber on Reddit or YouTube, I'm Cap. I'm a retail trader. I'm not a professional. I do technical analysis on AMC stock, per Bulkowski's chart patterns, and statistical analysis. I have his website pulled up above me, thepatternsight.com, and on my, well, it's my left, but your right, I have Thinkorswim, which is TD Ameritrade's trading platform software, and I love it. I'm not sponsored. These are just the tools and things that I use, and this channel is just cataloging this kind of stuff. So I want to get started with the 1 minute chart and start with shouting out to Shadre, who was the first commenter yesterday. If you comment first, you can just be on my charts. So I've been doing this for a while now, it looks like, and if you see yourself, you know, that's cool. You should comment again maybe. Maybe it's time to start cycling through, give people a chance to be on my charts twice. What happened today? Today was actually a pretty good day. We did see a sell-off in the morning, and that felt bad, and it was scary, but it wasn't too concerning. I'm gonna zoom in here, come down. It was kind of a drastic drop, wasn't it? And for a moment there, my heart was beating, but I wasn't worried. Generally, when we see volume picking up like this in AMC, it's pretty bullish. Just the volume seems to be a positive thing. The RSI fell off the face of a cliff right away, deep into the oversold region, and this is pretty common in the first few minutes after the market opened because the indicators have to normalize after the after hours and pre-market low volume activity. The open was nasty, there was a bounce, and then the RSI was like glued to this oversold level 30, and it came in and came out and came down. This kind of oscillation is really bearish and would signal a fall further, but support was found. And I'm going to turn on my 4-hour chart drawings to kind of talk about where that support came from. It's grayed out here. Let me change the time frame too and just talk about this. This is my 4-hour chart, and I'll get here, but this gray zone I'm showing you, this is a gap resistance or an accumulation zone. And VWAP here is kind of filling in where that gap is, but nonetheless, this is what I want to show you. It's very unlikely for the price to remain within this price range for very long. As you can see, never more than a day or two before jumping out or down. Going back into the 1 minute here, we can see how that level interacted with the price today. And it really did have a big impact. You can see that the bottom of that area provided the support for that last dip, and I accidentally put something here. This price level, just forget about it. That was an accident. I can't click it either because it's so small. Anyway, so that's where the bounce was, and when the price passed above VWAP, came back down, tested, and moved further yet, this was a really bullish signal. And you can see that the RSI was starting to work its way back up. When the RSI is between 45 and 55, I call that the coil zone. And it's not that the RSI coils, but the price tends to be consolidating and ready to bounce and jump after the RSI behaves this way. And I have those two levels marked in cyan and purple. Maybe I make this a little bigger too. And so you can see how the RSI reached this bullish level, came down, bounced off the bearish level, and then moved to the upside. And as soon as I saw this action right here, where the RSI was moving up and down in this region right below 70, which is overbought, this is a very bullish oscillation. If I see this and the price is in a good position like it is here above VWAP, this means a run is coming, and we saw that. We saw the oscillations became even more bullish, moving into the overbought region. Those two levels, overbought and oversold, the way they're named is it doesn't really convey the meaning and impact they have when we're talking about the momentum in the price movement. When I say overbought, it might make you think, oh, you've reached that level, you're overbought, that's too much, overbought, so that means selling, right, going down. And to some extent that is true with the RSI. If the RSI does come up and bounces off of that 70 level sharply and moving downward, that can be an indication that bearish momentum is going to start taking over. But honestly, that's not what you see most of the time. Like today, you see the RSI working its way up into this coil zone, and it's an oscillator, so I always think of it as wobbling, like a cylinder that wobbles. And when it's wobbling like that, it's about to fall one direction. In this case, it was up. And once it's up, it seems to stay there, right? like it wants to just continue. It gets knocked back, but it just continues to hammer up at that bullish strength. And that is how I read the RSI. All day today, I used it to be able to determine where these dips and where these runs were, and it was really effective. I posted about that on Reddit. Maybe I'll put the link in the description too. If you don't follow me on Reddit, I do daily TA posts kind of like throughout the day. When I have a second, I look at the charts and I can't see what I'm saying, and then I take a picture and I post it with a timestamp and I update everything. The times are in PST, but I really enjoy doing it. It's going to be a great catalog. I could take all that info and then I could put it onto like a Word doc and I could print it, and then I could have like this daily historic technical analysis of the charts. That'd be kind of cool. I don't know. Okay, that's really nerdy. Moving on. So anyway, we saw this run and the price soared above VWAP, not even bothering to test it for most of the day. There were a few instances where the RSI fell off the face of a cliff and then did reach oversold, and this is what I'm talking about. This can happen where when you reach that level, then you actually just reject it. But the thing is the indication that the momentum shift has changed is not in touching that level, it's in how the price responds to it, or how the RSI responds to that level. So you touch it and you fling off of it, okay, that's the reversal, right? But when you're up there just pounding up against it over and over and over again, that's different. So to see the RSI come down, which it does have to do, it does have to come down, and then bounce right back up is really, really strong. And we saw the RSI again moving into the coil zone. And the bears slowly started to win ground until we hit VWAP, which makes sense, honestly. So we saw this little itty bitty. I don't chart on the 1 minute like this, but this looks like an inverted head and shoulders pattern. There are rules to these patterns, like the length of time that has to pass, on what time frame of the chart the pattern appears, the volume, the incoming price trend. There's a lot of criteria when you're talking about chart pattern identification. So to look at a 1 minute chart and say, hey, that's an inverted head and shoulders, is not technically correct, and it's all about being technically correct because it's technical analysis, all right? You actually have to do it right, like specifically. So anyway, moving on, sorry, a little rant there, I just have that pet peeve. And so the RSI rose back up and blah, 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 blah. We had the VWAP test and we ended somewhere up here. It looks like a pretty tame day. Implied volatility, which down here is in the bottom, did take a hit. Did take a hit today, going down as the price rose. And yesterday I was commenting about how the implied volatility had diverged from its typical correlation with the price. We've been seeing in the days past that as the price comes down, implied volatility drops side by side. And that changed yesterday. We had this really big red day, right? Just this nosedive. And what that does is it moves the price outside of the trading zone from prior days, and that rises implied volatility. And then at that point, that's where that divergence occurs, and the implied volatility starts to work the other way. So we can definitely use implied volatility when we're inferring price direction. Today, we see that as the price rose, implied volatility dropped, all right? So what does that mean? That means if the price were to continue to rise, implied volatility would drop until the price reaches above the prior days or the prior periods range. And I think watching this tomorrow, or I'm sorry, on Friday, is going to be really important. I'm going to turn on the 1 day chart because that's what I want to look at next while I'm in this train of thought. Because I want to see what the range would be like for the implied volatility. And I apologize that I have VWAP up still. But you'll see that the price could continue to rise all the way through this other candle. And the price could just come all the way up. And implied volatility probably wouldn't start to tick up. So, I don't know. It's to see implied volatility turning down now is actually bullish because of that divergence, right? And I've been saying all week I want to watch the implied volatility go up. I want to watch the implied volatility go up because I do, because of the way that Vega, which is one of the Greeks, is used in calculating a premium for a call. But now that the relationship's gone the other way, I think it'd be good to see an initial drop in the implied volatility. until, of course, a certain price is reached, and then the implied volatility would need to rise, or would rise in response to the price if it went beyond there. And it's looking like that would have to be the case in order to meet the November 26th breakout date. So I came up with this breakout date based on the statistical analysis of Bulkowski. On his website, he talks about ascending triangles and how when the pattern is 60% complete, that there is a 60% chance of an upward breakout, and that's on his website here. I wonder if I could even quickly navigate to that. I do want to be quick about this. I don't want to take forever and bore my my followers. It's kind of cool that there are people who are watching me. That is really cool. Like, honestly, I didn't expect that anyone would be interested. So I really am overwhelmed and really grateful for the response that I've gotten. So okay, the ascending triangle overview, and this is what I'm talking about. You're going to see that on his website he has all of these statistics, right? Overall performance rate, average rise and decline, throwback pullback, percentage meeting price target, which is an important one. And then he goes on and he gives you the identification guidelines, and there are a lot of criteria here, right? So this is really things that need to be met. Now the breakout, this is what I want to show you, okay? He says that the breakout is upwards 63% of the time and 64% of the way to the triangle apex for both breakout directions. And that's where I'm getting that 60% and 60%. So the statistically likely thing would be that you see a breakout at that point in time and it goes up. So to kind of see that the day before we had this breakout and it's down, you know, that makes sense too in terms of the timing, but the direction is wrong. It's not statistically likely to see this pattern break down at this point in time, and that's what it appears to be doing. But I believe if you actually read into the way that the price is moving, that's not what's happening. I think that we're going to see a pullback into the triangle. And that's a technical term from Bulkowski, a pullback. That's when the price breaks down and then jumps back up into a pattern. And that is really what I think is setting up right now. You'll see that yesterday was a big, tall, red day. And today we had this super long tail, little body, and a little wick. All right, this looks bullish to me. This means the price came down and then came up. It didn't reach the price it opened at, but there was definitely a bottoming action occurring. And I am looking for that. I thought maybe we'd see an inverted head and shoulders on the over a few days, and we'll see how that's looking too. But that pattern could still be completely viable even now, and I actually see it. I actually see it on the daily. That would be the first shoulder and head right there, and then to see a big jump, and it makes sense if that the run stopped before it entered back into the triangle. It would probably fall like this and then break up and out, and the neckline would be actually slanting the other way like that. But again, I would rather not see the whole pattern play out if it's going to take this long. It's likely though, honestly, because this stock seems to always take up as much time to do any kind of move as possible. And when it does this, when it takes this much time, it just wears down that implied volatility. But I do expect to see it bounce back up into the triangle, and I really do hope that it happens just in one day. I mean, volume has been dropping, and it's going to be harder to get that move up on that decreasing volume. A volume event would be really appreciated right now, and I think that's due. We had this symmetrical triangle. This is not, my symmetrical triangle is not the same as everybody else's symmetrical triangle. Mine's much newer. It's not. I don't try to fit all the price action in it. But this triangle ended, right? And so typically what we see at the beginning of new chart patterns are volume spikes, right? Like the ascending triangle doesn't really have that. I mean, it does right here at the top. There's a spike in volume, and let's see, what day was this? The 3rd of November. You know, it's a relatively small spike. It's above that 30-day average, and that's what the yellow line is the 30-day volume average. So I think that's good. And then we saw another spike right there. That was kind of an outlier. But the volume since has not passed above that 30-day average. In fact, I don't even know how the 30-day average could be so high. This is incredible. How much lower can the volume go, right? Like, am I on the 1-day chart? I am. So what was our volume today? Oh, and that's a 50-day volume. 50-day average volume. I'm sorry. This study is not updated. But volume today was at 18 million? What? That is nothing. This has to be one of the lowest volume dips that I have ever seen in this stock. And I have been here since February, so that's something. And God, if if volume were to just randomly show up out of nowhere, this thing could just boom, it could hit this on the 26th, but we would need to see like that, those kinds of 1 million volume candles. Like we saw in the after hours today, we saw that 911 million volume candle. If we had something happen like that during normal market hours, that could have that kind of effect. And I've been saying for a long time that I have a lot of price targets that are still waiting to be reached, and just reaching one would start the next pattern to start playing out, and the next pattern, and that could really happen at any moment. It is really exciting being in this stock right now. It's very dramatic, very dramatic. When the price broke out of the triangle back here, I entered a position and I've just been holding it, and that hurts because I'm holding calls. So theta, the time decay, is working against me. Now, I did buy the calls that in the money, so I did have intrinsic value, but currently my calls are out of the money. That is to say that the price is below the strike price of the contract. So the only value in the contract is extrinsic, which is derived from the Greeks, one of which is theta, which is decreasing, and the other is vega, which is related to implied volatility. And so when I see implied volatility go down, that doesn't make me happy, because that's the value of my call option deteriorating. So when I say the price could rise tomorrow a lot and implied volatility would go down, that would imply that if there is going to be a big run tomorrow, there will be a window of opportunity to buy call options before the real premium increase begins. So that would be interesting. I bet if there is a big push tomorrow, I think the way that a pro would play it is wait for a signal, and that would probably be re-entering the triangle, and then evaluating the volume to be able to get an idea of how far the price may move, and wait for that implied volatility to start to tick up. Those three things happening in sort of that order would prove to be a good entry point for a call, I believe. But again, I'm not necessarily an expert trader. I am not an expert trader or professional. I'm just some dude, and what I do is technical analysis. Swing trading is something I do. I do day trade, and I'm pretty good at it. Sometimes I share when I've made a little bit of money, but that's neither here nor there. Okay, so I did have some pizza and a special treat. This is going to be a long video, and some people are gonna like it and some people aren't, and that's okay. I mean, I'm just here, so if you're here with me, that's awesome. Like, that's so cool to me. Let's get back to the 1 minute chart, because that's where I was, and turn on those drawings. Okay. Yeah, so implied volatility was coming down today, even though the price overall was up. And yesterday what we saw was the price come down and then rise here. This is where that divergence took place, where the price moved sideways and it rose still. And the price rose a bunch, and it didn't really respond to that very much. But that's because the price had just recently moved through that range, right? And so there was a dip in implied volatility here, but you'd think it'd be more dramatic, and it wasn't. The price bounced back. So the implied volatility's reluctance to reflect that dip was actually a bullish indicator. When the implied volatility was reluctant to follow that price action, it proved to be an indication that the dip was not real, that the dip was overstated in the price. That's really interesting, because for that relationship to exist, that would mean that the implied volatility's relationship to the price is positive, which it was at the end of the day, yesterday. So if the relationship between the implied volatility and the price is positive, let's just say that they move together, then when the price makes a move that is not reflected in the implied volatility, it will return to the price previous. Okay, that makes sense. So let's test that idea out. The price comes down, the implied volatility follows with it. The implied volatility bottoms, okay, but the price continues to fall. But that's the trick right there, all right? That means that the price is going to correct, and that is what we saw. That huge rise in implied volatility was because of that correction. So we can follow the implied volatility closely and understand when the price is about to pull back. And that is interesting. I'm gonna take that knowledge and go into the one-day chart. And now I'm losing all hope of trying to make this video make any sense. I'm just here. I'm having a good time. I like this. I might even do this live at some point. In fact, oh, that's what I should have done. That would have been cool, huh? Yeah, that would have been cool. Oh well. Let's go into the one-day chart. I'm turning off the VWAP. It's so annoying. Studies, edit studies. VWAP, go away. Apply. Thank you. Here we go. So understanding what I do about implied volatility and its positive correlation to price, we're going to go ahead and have another peek. We're going to reevaluate. Okay, here we go. Cancel that. So the implied volatility here is spiking dramatically. And the price is actually dropping at that point until right here. And implied volatility here is rising as the price drops. Okay, so that's a negative correlation because the price should have been going higher according to implied volatility, and then the price corrects to do just that and follows it back up. Wow. That's impressive stuff, because back here the implied volatility is dropping, and even as the price goes high, well, implied volatility is still dropping, so the price comes down to match it. Incredible stuff. Moving on. So as the price rises, so does the implied volatility, as it should. It peaks and they both move down together. The implied volatility is still positively correlating. There is a rise in the price, implied volatility follows, and then there's a dip. And then the price rises. Okay, very, very correlated. And then there's a big dip. There's a big dip in the price, but the implied volatility does not reflect that. What that means is that we're going to see a correction in the price to match the level that the implied volatility is at. And the last, if you just go straight back, the last time implied volatility was at about 125, 126%. The price was actually up here, more around $40. Interesting. So just looking into that correlation, how those two things relate, I think that we really could just see just a bounce up into that region, and to see a big tall bar after seeing this very like hammer-esque candle would just make so much sense. It would make so much sense. So I'm looking forward to seeing that. And initially, the implied volatility wouldn't go up, but I think over the course of the day that would actually look something like that, where it would just go up a little bit. I don't think it would have to like rise much to get into 40. And if that happens on a half day on a Friday, oh my goodness, that would. Can you imagine? It's a half day of trading, and all of a sudden, all these calls run into the money, and all these shares have to be accounted for. What a rush that would be, right? And we're kind of set up like that. Like that could happen. I'm not a Moaz hype. I don't even prescribe to cycle theory. I really keep my analysis very well grounded to Bulkowski, and stuff like this isn't necessarily Bulkowski's analysis, where I'm comparing the implied volatility to the price. But I bet you Bulkowski actually has something about implied volatility, and I should be looking that up right now. I can't believe that wasn't the first thing I thought. Like, why didn't I search his website for implied volatility? Let's see what Bulkowski has. he has something about it written about covered calls. Bukowski on covered calls. This article discusses the ins and outs of covered calls, prompted by an article in Active Trader magazine by Casey Platt titled "Earning blah 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 blah." Okay, well let's see what his comment was here. Bedroom implied. He says avoid stocks that have rallied, and I can't see everything. My screen actually doesn't show me. Enter only when the stock has dropped recently. That increases implied volatility. The stock dropping increases implied volatility. Typically, that's true, right? The price dropping. Volatility. Okay, I look for the stocks to move in a trading range because I want to continue owning it. Okay, so Bukowski does watch implied volatility. I think that's what I'm going to take away from there, is that he does talk about using implied volatility as a buy or sell indicator when he's talking about covered calls. So, okay, that's right where my headspace is at, and I can see Bukowski is too. So yeah, okay, maybe it is more aligned with Bukowski's analysis than I thought, and I actually really like that. The more I can contribute to him, the better. I think everyone should be learning from an expert, and he is. I am not, but I certainly seem to make good use of his analysis. So, yeah, that's what I see. The implied volatility is showing us that this is kind of a fake dip, and look at how low the price is too. All right, I mean, the VWAP over like 30 days is probably much higher than the price actually is right now, and even just the VWAP would have a gravitational pull on the price. I'm gonna go ahead and add that and edit studies. Here we go. If you don't edit your studies, that's totally cool. I get it. Not everyone knows how to do that. But Bukowski actually does talk about how to modify your tools so that they match your needs, and that's exactly what I'm doing. I'm gonna take these stupid like ranges off of the VWAP. I hate it when it's more than one number. And let's see here, time frame day. I'm gonna go. Should we go with the week or the month? Let's go for the month because it's the end of the month, right? So look at how much higher VWAP is. It's this purple line now. And you can see that when the price moves below it, it tends to come back up to it, and the two meet. And they really should move together. So in a sense, it has the same correlation that implied volatility has with the price. Which is cool, because it's been pretty stable. It's been going sideways. VWAP has been going sideways through all of this action, which is indicative of what? Indecision of pressure. It's pressure. It's gotta be pressure. This thing is ready to pop. And we're in a dip on low volume. Implied volatility has been rising while the VWAP has been grinding sideways. Okay, that's really interesting. That means this thing is getting ready to jump. It's getting ready to jump. That's what it looks like. And that could happen at any moment now. So this has been a pretty good look at my daily chart. Let's talk about the patterns that are here. The ascending triangle has a lower price target of $35.64 and an upward target of $51.37. These targets are calculated based on the height of the pattern and then a statistical likelihood, and that's how these numbers are produced. They've been really good in the past, and I'm really enjoying Bukowski's website because he breaks it down so easily, right? Like, let me go to the ascending triangle page here. Ascending triangle. Ascending triangles. Alright, here we go. So, you gotta scroll down. This measure rule, this is when he talks about calculating price targets. So it's going to be the height between the prices in the pattern, and then you multiply by the percentage meaning price target. So that's 44% to the downside and 70% to the upside, and that's what I did, right? So, you know, if you had a high of 44.44 and a low of like 34.44, you would have $10, right? So it'd be easy. You would add $7 to the breakout price to get that price target, which I did, or subtract $4 from the breakout price to get this. And this has been an incredibly useful way to understand what the price is doing as it moves up and down. Everyone knows it's going to move up and down, but the question is how far and when. And I'm really enjoying this analysis by Volkowski. Okay, so the next price target I have on the upside is from a symmetrical triangle, and it's currently grayed out, but this is the upper trend line, I've got it highlighted, and the lower trend line. And there's like 3 touches right in here. This pattern's ended, it's expired. That's why it's grayed out. I'm trying to use colors to help organize my thoughts and patterns to try to focus the view. But sometimes it's hard because I want to talk about stuff that's grayed out. So I'm thinking about coming up with some sort of way to, like a gradient. Like maybe purple patterns are new and blue are old, or vice versa, I don't know. But that triangle has an upward target of $54. What's cool is that if these targets are hit, then we're going to confirm a much bigger pattern on my weekly chart, which is this ugly double bottom. And I don't have a lot of faith in it because it's at the end of an uptrend, right? I mean, I guess technically the price is down, but you know, that's just what it looks like, because this can't be a flag for the length of time, it's too long, and it can't be a pennant for the same reason. It can only be a triangle, and I've got this actually divided up into a falling wedge and a symmetrical triangle. But you know, there was some pretty extraordinary stuff that happened back here, and we did break a few rules, and I'm thinking that, or at least the analysis doesn't really work back here. You have to understand that this consolidation was, yes, it was manufactured, yes, but the price does not imply intent or cause. It only shows the result, right? And the analysis based on that price action is the same. The intent or the action that caused this dip is not judged. It just is. And so we consider it. All right, we had this huge double bottom and all of this running up, this big momentum, and then it got thrown into a consolidation, right? And when it moved big. I think that all of this upward run resembles the initial strength. This is the residual strength of this first move in January. So that's how strong the move in January was. It happened, they turned it off, and then down the road, 4 months later, 5 months later, it still had strength and it still jumped up, and that's how much strength was had. And there was a lot of strength added in here as well. I remember when I was buying around like $8 and $9, and there was actually one night, I remember I was thinking about selling, and like, because you know the price had just come down to like $9 or whatever it was, and I told myself I'm not losing money on this, and I actually set a stop loss, and then I said no. I went to bed, but I got back up, and I deleted my stop loss, and the next day, I got up kind of late, but in the morning the price had dipped and then bounced back up, and had I not removed my stop loss, I would have lost my position as well. So in that instance, I was really grateful to have turned off my stop losses. But yeah, I was talking about that whole saga back then. Wow, I am having a hard time here, but I will continue anyway. So we kind of went over my weekly, the daily. How about the 15-minute? This is my most active chart. This is where I do most of my work. I'm gonna pull this up, and here we're gonna see this head and shoulders pattern that I was anticipating. I'm gonna zoom in and break this down a little bit. All right. You know, I'm always about a day early on these things, you know what I'm saying? So I am looking for an inverted head and shoulders, and that is still true. We can still do an inverted head and shoulders here. I'm just gonna pull this down. It's kind of a funny looking head, but that's because of that accumulation zone putting so much, support. I mean, I knew that was gonna be a strong support. I knew the bears didn't have the volume to get through it. Called it. So the head now is just 1 day later, so that's going to move our shoulder and the breakout a little bit. All right. That looks feasible. It really does. And I don't have a price target until the next shoulder forms, which hasn't happened yet. So no price target. In fact, it looks like there's even like a mini little head and shoulder down here too, huh? Interesting bottom. Really interesting bottom. You know what it actually kind of looks like? Now that I see it on the 15-minute? I'm gonna go ahead and just, for clarity, just delete those. It almost looks like a diamond bottom, doesn't it? Kind of has that look to it. Like the apex is missing, I think. So it's a little hard to see. But it kind of feels like it might be a diamond bottom. What do you think? 1, 2, 3, kind of 4, 5, 6 touch points. That seems good. Let's have a look on Bulkowski's website, see what we can gather from that. I've never seen one of these before, so I really want to get any help I can, and Bulkowski is going to be the best source of information. So chart pattern, let's go to index, go to D, diamond bottoms, here we go. Diamonds are as tough to spot as night crawlers in the grass on a summer night. Most often you'll find diamond bottoms in a bull market with an upward breakout. Okay. A redeeming quality of diamond bottoms is that a quick rise sometimes follows a quick decline. Okay, whatever. Hey, that's gotta be what that is. That looks really good. Let's see, overall performance rank for upward breakouts, 27 out of 36, not great. That's alright. Percentage mean price target for upward breakouts is 73%. That's gonna be an important number to remember. Price trend has to be downward leading to the pattern. Check. Shape looks like a diamond. Price, but usually one tilted to the side. Okay, check. Yeah. Trend lines. Price form higher peaks and lower valleys in the first part of the pattern. Then price action narrows with peaks and higher valleys. Yes, right? Kind of, just barely. Like, it's kind of implied almost. Touches. Price will touch each trend line once or twice. Don't worry if your lines cross some of the price outliers. So there is a touch on each line, that is true. Upward. The breakout is upward 74% of the time when price closes outside one of the trend line boundaries, which we did. That's exactly what we did today. We would be outside of that trend. Let's zoom in. Blow this up a little bit. Yeah, I think I like it. This bottom left side, it's got 1, 2 clean touch points, and then this one as well. I mean, just like 2 bars apart, or 1 bar apart, and this also has only 1. So the tops only have 1, but that's because they're entered into there too. I think that's a diamond bottom. Ooh, let's figure out what the measured rule is. Yes, new pattern, new target. I'm gonna have a really specific target for Friday or Monday next week, and that is something I like to do. Let me go ahead and zoom in here. I wasn't really expecting doing any of this right now, but I just kind of am, and oh my god, 38 minutes. Well, I guess I should have gone live. Okay, here we go. So see the measure rule, figure to the right. Compute the height from the highest peak A to the lowest valley in the pattern, then multiply it by the percentage of price target. Okay, that's pretty easy because it was 78%, and we know what our breakout price is, right? It's gonna be right, whatever here is, 38.70. Probably use 38.80. Okay, so highest high and lowest low. What was this high? 39.45. Let me get a calculator up because I'm not going to be able to remember any of these numbers. 39.45, and that was correct. And then we're going to take the lowest low, 37.55. 37.55 equals 1.9, and then we're going to multiply it by the percentage meaning price target, which was 78. We get $1.48, and we're going to add that $1.48 to 38.90. Whoops. And what is it? Oh, that's not right. 38.90. Ah, shoot. Oh, man. How often do I do this kind of stuff? I wonder if I can look at the history. Let's see if I can figure that out. $1.90. $1.48. Okay, $1.48. That's what I gotta remember. I don't even know what I did wrong there. Okay, so $1.48 plus our breakout price, which was 38.80. 38.80. That's what we're gonna go with. 38.80 is $40.28. That's interesting. $40.28. That would put us. Oh, that's a modest thing. That's a modest target. That is very doable. Let's just put a price level down. $40.28. And I don't know, orange? Let's use orange. I haven't used orange for a while. Oh, I gotta name it. Diamond bottom target. This is what it looks like. This looks like what I'm going to be forecasting. And this is how this happens. I say, hey, I think it's going to be a run tomorrow morning, and we're going to go to this price target. And that's what it is. That's the process. And it's been really good so far. Implied volatility did increase at the very end of the day with the price. And this isn't actually even just today. This is 11:24. Okay, cool. Oh, that is today, yeah. So towards the end of the day, we did have this implied volatility rise. And yeah, so tomorrow morning or Friday morning, a spike in volume or price, implied volatility, and then move up to this $40 region. And if it does, I mean, this is basically saying that the $40 strike is going to be in the money this week. That's kind of a bold thing to state because it's a half day and there's a holiday, but the statistical likelihood of it is still there. I think maybe the holiday trading, the environment, right? It actually doesn't fall within statistical likelihoods, I guess. Like, but it would only be bullish, right? Because what happens is this pattern gets to shape out, and then everyone gets to say, all right, we know it's holidays, so volume's light, but the price target's up. And so people just wanting to get in are going to have a stronger effect in a lighter volume environment, right? If the bias is positive going into Friday, I think that bodes really well. I wouldn't be surprised if the $40 strike expires in the money. Well, you know, it could be that the price moves up, hits this, and rejects. And that's going to be the signal. We're definitely going to expect a rise on Friday to $40.28. And really, I mean, I'm hoping for like a big explosive move. But this is going to be the first hurdle, is this level here. Moving above this level is the signal that the move higher is going to follow. And implied volatility would either confirm that or you know, it wouldn't rise. So looking for the price to rise with implied volatility tomorrow, and that can happen on the shorter time scales. On the daily, it didn't look like that makes sense, but it makes sense on this chart. So that's what I have for this video. That was a long time, so this process, the video is gonna take forever to export.